Hello, have you ever wondered how the US and China went from trading a little to becoming huge trading partners and are now drifting apart again? It started in the 1990s. For years, the US and China built strong trade ties. China grew fast, especially after joining the World Trade Organization in 2001. They went from making simple stuff like clothes and shoes to advanced electronics and tech that made them the world's biggest exporter. But since 2018, things have changed. The US has been trying to rely less on China, especially for high tech things like computer chips. That's called decoupling. We're now getting more from countries like Mexico, Vietnam, and Bangladesh. The shift helps the US avoid depending too much on one country, but it also means working with newer producers who aren't as fast or reliable yet. And as trade tensions rise, especially over rare earth minerals, we're seeing how complex and risky global supply chains can be. In the end, some say trade wars hurt everyone by slowing growth, reducing competition, and raising prices. So let's break this map down. It shows us how much each state in the US relies on trade. Now, that's imports plus exports as a percentage of its total economy or GDP. The darker red states, they rely a lot on trade, over 25%. The lighter blue ones, not so much. So, why does this matter? Trade wars might sound far away, but for some states, the hit could land close to home. Because if there's a trade war, meaning countries start charging each other more to do business, the redder states could get hit harder. Think job losses, higher prices, or slower growth. It's like if your town only had one grocery store and suddenly that store couldn't get deliveries. Everyone feels it. States like Michigan and South Carolina, for example, are very trade heavy, especially in cars and manufacturing. A trade war messes with their money. The takeaway, even global issues like trade wars have local impact. Where you live can shape how much you're going to feel it. Manufacturers are feeling the squeeze, and in short, it's been a tough month. Companies say business activity slowed down, and not just a little. Orders dropped, shipments fell, and overall momentum turned negative. Now, even though sales dipped, most companies held steady on hiring. Almost nobody added jobs, but almost nobody cut them either. So, not great, but not a panic. Prices still going up. Companies are paying more for supplies and charging a bit more for their products. That's inflation, and it's sticking around. Looking ahead, most businesses aren't super optimistic. They expect things to improve just by not much. They're being cautious with big spending and aren't planning many new hires. Bottom line, April's survey shows manufacturing is in a bit of a slowdown and everyone's watching closely to see what comes next. Let's see what May brings. Thank you, and if you have any questions, please let me know.